Hello, this is the TradeSet US Stocks and Futures Market Preview for Thursday, January 30th and Friday, January 31st, 2020. This is the end of the week. As usual, we don't typically do a market preview for Fridays because most of the week is played out, so this will suffice for the last 2 days. In addition, this is the end of the month. We're talking about Friday is January 31st, so everything for the month closes out. This is the first month of the year already handled. Let's look at the ES front month futures contract. This is the daily chart of the broad market futures form. And, we've had that 13 sell signal on the daily. Is what it is. Tesla up big in the aftermarket, but a lot of other stocks down. So that short squeeze on Tesla continues because people were trying to deny the future. I just like to rub it in. Sorry, just a personal opinion, but anyway, I thought Tesla wasn't amazing and one of the next big companies. I had people telling me to short the stock at 200, which is crazy. So I never understood that part. But now it's up 70 points in the aftermarket. But everything else that released earnings today after that close was down. So right now, this is really, really interesting. This is a battle for a couple of reasons. First of all, we got the 13 sell signal on the daily. We know that. That's not great. It's so far, it started to roll us over. And you could go, well, if we roll over for 3 or 4 or 5 days, who cares after that? And according to the Fed today, everything's great. The economy's going to be fine. So now we're down a little bit again in the for tomorrow's open. Currently, now I'm saying this tonight, so tomorrow is a whole different thing. But the big thing I want to keep pointing out is this: the monthly chart had that 13 sell signal. Remember, this is candle by candle, 1 month at a time in October, and the risk line of that is 32.55. You can't make this up. So right now we're at 32.57.50. We're 2 points above that risk line. So Friday is the close of the month, 2 days left, Thursday and Friday. Where we close Friday is important because if you close below that risk line, then you have to go a whole nother month. And eventually, if you could close above it and then take out the highs of that month, then you would have broken the risk line. So that puts you until March before we find out. If you can't close above it, or if you close above it, if you close above it on Friday, then all you have to do is take out the highs of this month in February, and you've broken the risk line. Doesn't mean that we won't top out or roll over, but it does mean the signal is kind of busted, and that's not usually how these signals work. So we've got 2 in a row. I can't remember the last time I saw a stock get 2 13 signals fairly close looking on the chart. This is a monthly chart, so this is years and years and years. This is 15 years of data, 16, 17 years of data. But there was a 13 signal just 4 years ago, and the risk line got broken fairly quickly. And so usually when that happens, whether you're on a daily chart or a weekly chart or a 5-minute chart, if it happens and then you get another signal in fairly close proximity, which is what I would call this, the second signal is more important. And again, if we close under 32.55, and you can see it moving right now, we're within a point of it. That's where we're hovering to close out the month of January with 2 days left. Anything lower than this means that the risk line held and the sell signal is still in place. And the target of that sell signal, by the way, is that red line, the 2000 point, which is a 33% correction in the S&P. So this is very important to keep monitoring, but we won't know until Friday. And I'm just saying, even though Tesla's up 70 points in the aftermarket, Facebook and several other stocks are down on earnings, and the futures are showing a down opening tomorrow morning. We'll see what we get. All right, let's go through the daily charts. Crude oil. The good news here, crude oil is near the lows of the last 6 months, down at 53.02. It's good news from a at the pump perspective. It's bad news if you crack this low because it kind of means the economy is slowing down. There's no demand. So we'll see what happens. It's a fine line there. Gold up $8.70. So the S&P closed after being up most of the day, closed down $2, 2.84, and the Nasdaq was up 10.68, but most of that was Apple, and we'll talk about that in a minute. The SOX down 34.57. So the 13 sell signal on the SOX is way more effective here than anything else. The biotech's down 398. These things are down for they're down since January 1st, even though the Nasdaq might be up and the S&P might be up. These other things are down. Russell 2000 down 9. VIX up 0.11. The trend closes at 1.31. That's it's about where the 10-day moving average is because we've had some high readings. So that's not going to change anytime soon. Nasdaq volume was 2.2 billion shares. It's down, but remember, again, here's the problem. The clear up days, the market volume has been down. The clear down days, it's been up. This was one of those days where we held up most of the day. Then there was a Fed announcement, and then we slipped late, and there wasn't enough time for that. Advanced decline ratio on the Nasdaq. Actually, this is important because it started like plus 1,000, and it was negative 723, 716 at the close. So way more stocks down than up. This is funny. On the New York, it was 4. So out of all the stocks in New York, 4 more stocks were up than were down. Google gained $6.20. Apple, now here's the thing, Apple's heavily weighted. Google is too. Both of those being up 6 points, that keeps the Nasdaq up, but not really. Everything else was down. Like that's what it's got, a stealth bear move, right? The market's down, the stock's down, the biotech's down, everything's down except for the Nasdaq shows plus 10, but it's because Google and Apple are up 6, and that weights the Nasdaq. Netflix down 5, but Amazon up 4, which doesn't even really matter because it's an $1,800 stock. Tesla was up 14, and again, I will tell you, trading at $650 in the aftermarket after the earnings. They are just killing the shorts on this thing, which is awesome. I'd love to see that. Facebook up $5.44 to all-time closing highs, but it's down in the aftermarket on earnings. Goldman Sachs down $2.45, and TLT, the 20-year bond ETF, up $1.40. The Dow up 11, which is basically flat, so nothing there. All right, in terms of intraday action, here it is. We gapped up, we filled, we went lower, we tried to recover. Dead flat for 3 hours into lunch and beyond. The Fed announcement causes a first wave spike up, the second wave come back. We're sitting flat after that once they digested the earnings, and then late in the day, in the last hour, we did sell off and we closed at the lows of the day. NASDAQ side, not much different. It is what it is. So, not a super pretty market from that perspective. In terms of economic data coming out still this week, we've already had the Fed announcement. We've had a lot of our data, but we have a big one Thursday morning. The advanced look at GDP. It's the first look for the fourth quarter. It's a big number, expected at 2.1. It may or may not matter what it does because the market's going to be looking forward, but we'll see. Along with the initial and continuing jobless claims, those are all an hour before the bell. Natty gas an hour into the market at 10:30. On Friday, because this is it for the week, core PCE price index, employment cost index, personal income and spending, 9:45 a.m. Eastern Time, Chicago PMI, and the revised University of Michigan sentiment 10. And that is it. So that is the rest of the week. We will see what we get. It's interesting. There are so many sell signals. There are so many signs of trouble. And on bigger and broader time frames, on the daily chart, which is still a big time frame, the futures are pointing down again. It's not looking super great, but you never know until you get there. I think this is, we've been saying this for a couple days, and we had a great day earlier in the week. I think this is the start of something special in the markets, and we need to be excited about it. But it's going to be the downside. Bottom line is it's going to be the downside. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and